model, right?
Yes. Yes.
Now, there's another thing I would make sure you read. I just tagged it on the group now. I put a dot on it. It's different write-up. So one person will take the first one. The second person will take the next one. The ones in the two picture box. And the third person will take the other one. I want three people that can read very well. Let the first person start. Let's read this thing before we start our class today. Between. Don't forget, market maker and buyer and seller is very, very, very important. Please have a mental picture of them on your head. They will always play out, all right? Just this small pip GU has done. It's 200 pip I have achieved on this GU. This is it. Where's GU? 200 pips. So, guys, one person should go quickly.
All right. So this is Obina speaking. So
look at
the elements.
Look at this small movement he has made. 200 pips. All right, go on. Element of what?
Yeah, so the elements to a trade setup plus institutional reference points plus institutional order flow to understand how we can combine the context or framework. In brackets open, element trade, bracket close, which we surround our trade idea on. In bullet points, reference points in institutional order flow. Number one, order blocks plus expansion. Then the explanation is, as traders, when price expands, what do we need to be aware of in price? The order block, the market makers
Don't rush
leave.
it, please. Don't rush it, please. I want you to take it calmly.
Okay. So let me go back to the explanation.
Reference point in institutional order flow. This is where I want you to read it. Order blocks plus expansion. Don't rush it. Take it calmly. All right.
All right. So reference points in institutional order flow.
I hope you guys are listening.
Order blocks plus expansion. As traders, when price expands, what do we need to be aware of in price? The order block, the market makers leave at or near the equilibrium. So that's number one. Next person. Yeah.
Continue.
Okay, continue. Number two, fair value gaps and liquidity voids
plus
retracement.
All right.
The explanation is this.
No, don't explain.
Okay, do I continue?
Just read as it is there. Don't explain.
All right. When price moves quickly away from an area in the marketplace, it usually leaves
a missing data. I was showing you guys something before this Zoom ended up and messed us up. Now look at this Euro USD. I think that's what I was showing you guys before the Zoom ended. Now look at this Euro USD now. Look at this Euro USD. When price gave that first entry on a 4-hour order block, right? I think I was explaining that for you guys before this Zoom went off. You see, it gave this entry lower, higher highs, higher lows, higher highs, higher lows, right? And it started making lower highs, lower lows, right? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. It switched again. Now, when you can anticipate your entry, these people they gave initial sales, wait for them to take them out. Wait for them to what? Take that's why I say wait for lower time frame confirmation. If they take them out and did not break, you see when they came, they took them out. Now you see how they left that zone with force. Are you seeing this missing data? This is a fair value gap. That's the missing data you're talking about. They left that zone and see how they bounced off this fair value gap. When I'm teaching you fair value gap, I'll teach you. Anytime you see price bounced off a fair value gap, it's called institutional order flow entry drill. You're fed. All right, continue reading. I just want to show them that's the missing data you talked about. This is the missing data. Is an inefficiency in price action, whereby two candles trading into one candle. So this missing data, they always return back to fill it up. Go on. Is that clear, everybody?
When price, yes, it's clear to me.
All right.
When price moves quickly away from an area in the marketplace, it usually leaves missing data some point. It could either return to a breaker, mitigation block, or other block. We will expand more on this in the next few weeks. Number 3, liquidity pools and stop runs plus reversal. Liquidity pools are created in the marketplace to trigger stop losses, buy and sell limits, and reverse the other way. Number 4, equilibrium plus consolidation. What do we look for in price? The impulse swing in price away from the equilibrium price level that is found exactly in the halfway point of the consolidation range.
Now, I will explain very well about consolidation for you guys today. I remember I didn't do justice to it yesterday. I'll do justice to consolidation and expansion for you guys, right? Now, look at this box. This is a consolidation range. Are you seeing this Asian box, the blue one? That's yes. Consolidation. This red box is London. This green box that just formed now is New York, has already opened. Now, Asian session started and did this movement. London came and take out Asian low and take out Asian high. Now, let's see if New York will come and respect London, then take out what? Previous day high. This previous day high is what? New York high. So now it was talking about consolidation. Every consolidation is accumulating of orders. There is no expansion that is done without a consolidation. What did I say? There is no expansion that is done without what? A consolidation. That is where they accumulate orders. So when I'm teaching today about bullish structure, I would explain about consolidation right on.
Yeah, so that's about it. Number 4, that's the end. Yes, ma'am.
Okay, the next person, take the next reading. Who is the next person? Please read it carefully and articulate. The next one is the box, where you have those boxes. Who is the next person to read?
Okay, I'll read, ma'am.
All right, introduce yourself, then start reading.
Bali FS Ahmed Usman.
Okay.
Premium and discounts are raised.
Listen very carefully.
The midpoint of any range is the equilibrium, which is the 50% of the Fibonacci tool. If the second one, if price is leaving a discounted price point, it wants to seek a premium price point.
Hold on. Do I always say this, yes or no?
You do, ma.
I'm not the one that wrote this.
At all.
I got this from my mentorship group where I was mentored, because the way you're going through mentorship, I also went through mentorship, right? That was where I saved this from. They don't allow us to save anything from the mentorship group, so I couldn't even get any video or anything from the group. It's a Discord server. Now, when price leave premium, understand that this is economics, this is mathematics, this is buying and selling, not about how many things, not about how much or the blog. They want to sell from a high price. The banks want to always win and win and win. So when they are leaving discount where they have already gotten it cheaper, they will want to sell to you high price. That is why if you're going to change dollar in the bank, you are selling to them. Do you think you buy from them the same price?
No.
When you are changing dollar, they change for you, for instance, 7.15. If you're going to buy from them, how much would they sell to you? Maybe 7.18. So that's what you should understand. That's how price is booked in the algorithm. That's how they deliver price. Continue reading.
Okay, ma. The third one now. PD arrays can be used to anticipate future prices where the CBN might potentially kick in to sell or buy a move. The PD arrays reference points are in order of importance of how price will reach for levels. If one level has been retested too many times, you can expect price to move past that level. We can also use these levels as take profit zones. Now, using PD arrays, first of all, identify your range, that is the high and the low. Identify. Okay.
Hold on. Did I talk about identifying your range yesterday?
You did, ma'am.
Yes,
You did.
Now that's the first. I'll teach you people more. Don't worry. There's something I pinned on the group that you need to look out for when you're doing your setup. I will still teach you. I taught the other mentors, the other students. For every single time you want to go into your chat, identify your range first. And see if price is on premium of that range or discount. Don't just jump into the market. That's why people will say, how come Pretty Queen is always catching snipers? If they call her, they want to move. It's because I always look out for the range. And I know where they usually want to. I want to anticipate where they will book their discount price or book their premium price. And I would like to join them in that move. So always check for your range. Go on.
Identify levels and institutional price points. Expect price to reach for these levels in order of appearance on the chart. Now, a quick nugget. There are lots of setup in the market. You want to trade the most profitable setup to go in your favor. The ones that will make you money.
All right, read what you have on that box.
Ma?
Read what you have on the second box.
Okay. Short-term trading plan. Premise. Trade in sync with market structure. Duration.
Not that.
Okay. Premium arrays. PD arrays now. The way they are arranged. Premium array.
Short-term trading plan. Go on. Short-term trading plan. Go on.
Okay. Premise. Trade in sync with market structure. The duration.
Did I say that yesterday or not?
You did, ma.
Yeah, you did.
I said don't trade against the trend, right?
Yes, ma.
Yes.
Don't counter trend. Said it.
Because you are not sure when they will decide to reverse back. They don't owe you any explanation. They can move price off nothing, no other block, no fair value gap. That's the way they behave. But if you are with trend, you can anticipate that you can be looking forward to when they want to continue the trend and join them. Now you see the way they move GU and EU now into selling. It's a downtrend overall, right?
Yes.
All right, go on.
Duration intraday to a few days. Average pips 50 to 150 pips per trade. Now, trade long in the observance of bullish market maker profile in bracket fractal. Trade short in the observance of a bearish market maker profile.
Hold on. What I always tell my students, stop looking for 100 pips, 500 pips. You are being greedy. With what I will teach you, you can conveniently get 30 to 50 pips per week on one trade. Stop loss 10 pips. Do that 4 times in a month is how much? Let me just say you accumulate over 150 pips. Gradually, you begin to build a model. I don't know if you're getting me.
Yes.
Gradually, you begin to build a model of sustainable profitability trade. Oh, the news is coming. Wow. News is coming. Right on.
Look for price patterns and confluences. OTE for entry price and fib extension for taking profits.
What is OTE? OTE is 72%, 79%, 89% of your Fibonacci.
Please come again, ma'am.
It's called the optimum trade entry. Some people call it the sweet spot for every trading range. The optimum trade entry or the sweet spot. So people use it to get a continuation of the trend so that they can join in a trade they are not currently in. So instead of now waiting for maybe price to come to another block, you can just use an extension, do this whole expansion, and anticipate a certain level, maybe 89, 72, or 79%, and join in the trend. All right, okay.
Use risk management and control drawdown. 5 days or less is considered short term, and anything more than that would be a swing trade. You don't learn anything from losing 10+% on just a few trades, so keep your risk low. If it is a red bus below, because it is when you should be on alert, expect a retest of the support that was broken to get price into the red box. In the gray area, we don't really know whether the support level is going to hold or not. This profile can be looked for on a 5 minutes, 15 minutes, 1 hour, 4 hour, and daily charts. It is a fractal pattern. Do not move your stop until the OTE short from the left green bus to the second blue bus is cancelled out or invalidated. When short-term trading, take profits where the stops would be resting. In the image below, that would be right above the green bus on the left. As price moves up in your favor, look to take profits at previous highs because there is a pocket of liquidity there. When those stops are taken out, it could be a reversal lower than.
Hold on. You said look to take profit at previous high. Did I say previous high there's liquidity, right?
Yes, ma'am.
So you take profit and you say, but me, I usually like taking profit before the high. Or not, maybe this fair value gap, this imbalance, right? So that you are just safe.
Should I continue, ma'am?
Continue, Jeff.
As price moves, okay. Once price has reversed from the gray bus, we start looking for entry signal such as trend following divergences, stinger, ICT holy gray, reflection, bull flag, etc. That will give us an indication that price is moving higher. That's all, ma'am.
All right, next person, read the next one. Who is the next person taking the next one? That's the last reading. Is it only Bali and Obi that we have in this class?
Always use this as a guide to frame your setup.
Ima, you know how to read English. Why you not always fast to read? You're dragging behind. You that I know 101, you're supposed to be among the top people, always being first to answer questions. Self. I will be calling you out and disgracing you in this class. So read. You that is a forex trader, why are you dragging behind?
Should I continue?
Right, yeah.
Okay, always use this as a guide to frame your setup. IBDA, IPDA, which means I for interbank, P for price, D for delivery, A for algorithm. But personally, I also use it as I for institutional, P for premium, D for discount, and A for array. Before you frame your setup for any range.
IPDA means interbank price delivery algorithm, the way they deliver price. All right, continue.
Okay. Before you frame your setup for any range, identify if price is in a premium price for that range or a discount price for that range.
Wait, hold on. As you are reading it, this guy's listening. I don't want to read it like a rhyme. Are you taking note of what is written there?
Yes.
Everybody, are you taking note of what Ima is reading?
Yes, ma'am.
Yes.
Yes,
ma'am.
ma'am.
Sorry, this is not Ima.
Alright,
This
go
is
on.
Destiny.
Yes, ma'am. Okay.
Destiny, not Ima. Yeah. Before you frame
Go
your
on.
setup, for any range, identify if price is in a premium price for that range or a discount price for that range. How do you do that? Yeah. For a premium price of a range, price must be above 50% of the Fibonacci level on the high and low on the body candles of the high and low of that range. For a discount price must be below 50% of the Fibonacci level of the price. That is how to identify the range at which percentage currently is and which price is heading for. Weekly price range or a daily price range, high or low. Identify the market structure you are trading on. It is a bullish market structure or a bearish market structure. Bullish market structure. You will want to see a swing high form a close of body candle above a previous high. Then you anticipate a swing low. A close of candle above a previous low without breaking the low. Then we anticipate a shift upward, breaking that swing high formed. And we consistently see price breaking new highs until a key resistance, I think resistance or support is reached. Bearish market structure.
Hold on. Sorry, hold on. I took a step out.
Yeah.
You read something that there's the mentorship group. You read something that in bearish market structure, blah blah, swing low form. Now you remember what I said about bearish market structure. You want to be looking for fractional movement that supports the bearish PDR rates to keep going down. Meaning you want to see a swing low formed and a swing high being what? Respected. I want you to read in between the lines. I was the one that wrote this thing out. I wrote it out. I was the one that wrote this thing out that is reading.
Okay.
Ensure that in a bearish structure, you want to see swing lows form and swing high being what? Respected. A bullish structure, I want to see swing highs formed and swing low being what? Respected. Those are the factors that support that PDR rate. You need to understand that as this movement is going, ensure that they are trailing a liquidity. That's why they are driving. They just don't move. They just don't move because they want to be bearish or bullish. Either they are moving to take out an old high of maybe 30 years ago, 40 years ago, 20 years ago. When I teach you liquidity, you understand why they move the way they move. That's for our next week class, all right?
Okay.
Okay.
Then you always make sure you are following them in the trend so that if you have a drawdown, you know that they will always reverse and reach out to you. But if you're against the trend, if you have a drawdown, maybe it's the next 3 years before they'll come back to you. Respect the market trend. Let's go, Ima. Continue.
Oh, no, this is Destiny or not Ima. Okay, bearish
Sorry?
market structure.
Stephanie?
It's Destiny, yes, not Ima.
Who is Destiny? What is the Telegram name?
Dominos.
Okay. Just call your Telegram name. Don't call those name I don't know.
Okay.
Okay, Destiny, go on.
Bearish market structure. You want to see a swing low formed. That is a break of a previous low. Then we anticipate a swing high without breaking the previous high. Then we see a shift momentum in precise downwards, breaking the swing low. And we see price making new lower low and lower high, breaking new lows and retesting a previous high without breaking the high until a key super or resistance
is reached. Now, that's it. That's why the resistance is bullish now. They are trading bullish, right?
Yeah.
You're talking about resistance, they're trading bullish. That's why you have resistance.
Yeah.
Until a key super resistance is reached. Now, resistance resistance could be maybe they sweep an old high. That's a resistant point whereby now they've taken out maybe 90-40 high or 90-50 high. They can now reject from that level. Price is telling them, I am not going above that level. That's why you see a rejection block being formed. You see the rejection block. Then you now see an order block. You now see what? From rejection block, a bearish order block, a bearish fair value gap. As a result of massive movement of price out of that zone, they leave a missing data that they'll come back and what reprice that level. That's a fair value gap. A bearish order block, bearish fair value gap, a bearish proportion block now supporting that we are going bearish from premium. We have reached a key resistance level. Now we are going bearish. We are going, a bearish PDRA is being formed and respected. A bearish proportion block, a bearish liquidity void, right? When you see those PDRAs being formed and respected, you know that there's a change in trend or a temporary reversal from a key zone. Am I communicating?
Yes, yeah.
Yes,
Take
ma'am.
note of all these factors. You see them playing out on the chart. You understand their movement. That's why sometimes I can say, so thing will happen. It will happen because when I see this footprint, I know that that's what they are doing. But many people don't understand the undertone of market makers. Understand the undertone of market makers, how they move. Try to think like them. Before I was just trading other blocks. This year has been my most successful year in Forex. Why? I had a lot of work put in. I started thinking like I started looking for what they are looking for. And most times if I make a statement, it's almost correct. So start thinking like them. Stop looking for what they are not looking for. Start looking for what they are looking for. You see them moving. Continue, Dominos.
Okay. If you follow these basic rules, you will get to understand price direction by simply following a break in market structure and a RTO, return to order block.
Remember when I talked of return to the order block, I said follow their footprint of liquidity. They will leave an order block that they will revisit. That's where you cannot take your entry. Remember I said so?
Yes,
Yeah.
ma'am.
Don't look for other blocks unnecessarily. Let them make that move. They will give you here to join them. Don't chase them. If you cannot and if you cannot anticipate them correctly, let them do what they are doing. They'll give you opportunity to join them. But when you're trying to guess, they sell, you sell, they buy, you buy, they'll be taking you out in a whipsaw manner because they will buy and sell at the same time. They have to place a buy order to sell. They will throw you up, and before they sell, they will place a massive buy order to throw traders off. All of you, oh, you run, and they will not sell to you at a high price. So that's all for today, guys. I hope all of you understand that reading. Now let's go to today's class. Today's class is bullish market structure. I hope you understand that reading. I hope you understand how they move from premium array to discount array to premium array. I hope you all understand.
Yes, ma'am.
Yes, ma'am.
I've done my best in explaining that.
Yes, I understand.
Next week, is something I need to read for you people when you are looking how to make a proper setup, but that'll be next week. Now let's do. We have a lot of pairs that has been on a downtrend. I want us to look at GBP AUD. That pair has been crazy. Somebody was stressing himself trying to sell that pair. One of my team member. So let's look at GBP AUD. It has been on a bearish trend. It has been on a what? Bearish trend. So we are going to be looking at the trend of GBP AUD. I'll mark all your assignments tomorrow, guys. Today I'm really occupied. As I'm teaching you, when I'm done, I have to go to the market to get things for work. So tomorrow is when I'll mark all your assignments. On Saturday when I wake up early. Truth be told, I've been awake since like 2 a.m. today. I've not slept since like 2 a.m. So tomorrow I'll mark your assignment. So GBP AUD has been in a bearish rally, a bearish drop. It has been in a bearish what? Drop. Now we're going to follow the story of price. How did price come about it coming this way? Let's follow the story of price, right? Now, when price started moving, it kickstarted from this spot and created this swing high. So we have this high right here. Then, as our swing high. right? Now, when they took out that high, we had some consolidation. Price came back. The order block that actually facilitated the break of that high, it came to mitigate that order block. But what actually started the movement? It is this zone. I can see this very clean imbalance right here. Who can tell me what this zone is? Our sponsored candle. And Ima, why have I not seen your assignment? How many of you have not done assignment in this class? If you have not done your assignment on bullish, you're not going to be in the next class. You must do your complete assignment on bullish on bearish. Bullish yesterday, and the bearish I'm going to drop today. All right?
All right, ma'am.
Don't do your assignment, just forget. You're not going to be in next class. So we have a complete break of this high right here on the word monthly. When we have a complete break of that high, we see our price rallied and took out this high again. This high was completely taken out. Now, when this high was taken out, this did not react off anything. It reacted off this area. The fair value got filled it, but this zone actually was not properly mitigated. Now they came back for that zone. That's a break of structure. They came back for this zone. You see how they rallied back this zone, and use this area. They first gave this buy as what? Inducement of liquidity. This place was used as inducement of liquidity. You see INDCM is inducement. So I want to follow the story to where we are now currently in price. Then we see our price rallied back up and took out this high. Another structure break. Why is a break of structure? There's a close of body candle above it. So that's a break of structure. That high was eliminated. When that high was eliminated, we have this zone that actually started the whole move, that facilitated the whole break of structure to the world upside. Now you see how price is moving. But before when we took out that high, we had price making a range structure. Now, what is a range structure? Range structure, when price is doing an immediate mitigation, instant mitigation without going back to the sponsor candle. Price is doing but instant what? Mitigation, mitigating the immediate order block that caused the immediate break of structure without going back to the sponsor candle. So this is a range structure. Now, range structure, we have our support zone of the range structure and resistance of the range structure. Range structure, they usually induce liquidity both on the buy side and the sell side.
Ma, please, permission. After this Zoom ends, I will not be this Bali FS talking, ma. After this Zoom ends, I will not be coming in to the class. I want to go to the mosque. It's time for my Friday prayers.
No problem. Someone record. Another person will have to record, so you can use the recording, okay?
Okay, ma. I'll post this to the class as soon as this ends.
All right. Thank you very much, Bali. Pray for everybody. Pray for your class so that I will not be having English. We would have been done with this class.
Yes, ma.
Now we see that this is our range structure. In every range structure, liquidity is induced at the buy and the sell side. After they done this range structure, failing to come and mitigate this sponsor candle right here, what happened? They went back and took out this high again. Another market maker buy model was complete. They took out that high. After they took out that high, this high was also what? Taken out. What I'll call this stop hunt. Now they have been going towards premium pricing from discounts in a range, in that range. They have been going more premium pricing from discount in every given range. While this range, this is their discount, they run this low out. Can you see how they run that low? They run this low out. They run this low out. They don't necessarily need to react off anything. You see how they run that low out? What was done? Market maker sell model was completed, right? That's discount. That's below what? A monthly low. What did I say about monthly low? liquidity is resting there. I said so, right? They took out the liquidity resting below monthly low. They push price up to discount. Where's the next target?